Welcome to the Silent Trading channel. Today I'll be analyzing the gold chart on Sunday the 15th of February to analyze and anticipate the price action and the movement for the next week to see if we could be able to get some position. And by getting position doesn't mean that we have to risk more to get less. To get position, in my opinion, we need to be able to risk less to get more, right? And by risking less to get more, I don't talk about RR. I don't talk about risk reward ratio. I talk about the least possible or the best possible position to be able to get at each price zone possible, right? So right now, before you guys watch, please subscribe, like, comment and share if you like this video, and to support me in my trading journal. Okay, so for today I'm going to be looking and analyzing the daily time frame first, or the daily candle. As you can see, the daily candle, the daily time frame has already created a bullish price action, but this price action is right now a successful one, but not complete one yet. Why? Because a complete price action needs to be able to break resistance, which means the next candle, the next daily candle tomorrow, we need this candle to be able to do what? We need this candle to do two things for us to be able to get a position. Is first, if you want to get a position on the daily time frame, we need the daily candle to open up, right? Open a candle, and the candle needs to be able to push up and break what? Break resistance. Daily resistance over here needs to be broken. Before the next candle retracement, it is where we're gonna buy, right? Why the candle retracement after the broken resistance? Because candle retracement is always not just to retrace, right? There is a duty for the candle retracement to do. There is a narrative. When candle retrace, it retrace to clear off buyers, right? For people panic buying or follow buying when the price push up, this retracement is always to clear off buyers. And retracement aren't only to clear off buyers, but also by retracing there will be resistance produced, right? The chart will produce resistance over here, and this resistance is for the chart to, when the price start pushing up again, this resistance is to be used to accumulate sell volumes, either from traders placing sell limits or traders waiting to enter position by market execution at this resistance over here. So when price retrace and then start pushing up again, this is where the price is gonna start accumulating sell volumes by people entering sell position or either placing sell limits at this resistance over here, which means price is only gonna start going up and up, because if price touch resistance and people start selling, the market will have to clear off all sell volumes, which means the price would have to go up and up and up, right? So by expanding upwards to touch resistance means accumulating sell volumes, and by accumulating sell volumes means price needs to go up further and further, at least further up until it has cleared off enough sell volume before it could start reversing again, or before it could start retracing once more to clear out buyers and then start pushing up again. Which means if we are gonna buy, we're gonna be buying, we either wait, right? We either wait for the price to push up, break resistance, retrace. This is where we're gonna be buying, right? We either buy from a buy limit or we either buy by market execution, right? So this is the only spot that we're going to be buying if the market start breaking resistance. And if market start breaking resistance continuously, this is also the spot to be buying, right? So we always buy when the market retrace, not when the market start pushing up. The expansion upward is not where we're going to buy, because we're going to be in a deep drawdown when the market start reversing. So if we buy when the market push up, right, push high enough, and we start buying at here by follow buying or panic buying, if the market suddenly decides to start reversing and start dumping down, we are gonna have a buy volume at above, right, at the top, which we don't want this to happen. So we are never gonna be panic buying or follow buying, we wait for price to retrace after the price has broke resistance, right? A resistance broken means buying at the next retracement, and the next resistance broken, right? This resistance broken at the next retracement is where we're going to be buying. So for the daily candle, we wait for the price to do this, break resistance, retrace, and then we start buying, either by buy limit or either by market execution. And what about if the price start pushing down on the daily candle tomorrow, at the daily time frame tomorrow? If the price start pushing down, our buy limits would be to buy at where? We'll be buying if the price start pushing down, right? We'll be buying at this wick over here before the next support. Because if price push down to touch support, it means price is accumulating what? It's accumulating buy volume, which we don't want our buy position to be in a drawdown. But if it goes as far as to touch this support over here, we know we are in a risky position. We will be needing to clear off our position if possible, which means if the price start pushing down, this will be our first buy limit, right? Before touching support. This is our first buy limit if the price start pushing down, because if price start pushing down, this will be our first buy limit. Why? Price start pushing down from the daily candle, which means this may be a retracement to start pushing above again, right? So the price could either do two things. It could either push up, break resistance, and then retrace and then push up, or it could retrace at tomorrow by pushing down first, right? If the price start pushing down first and you buy at this bottom wick over here, right? This is where we place our buy limit. And then if the price start pushing up from this wick, okay, it's all good. If the price start reversing from this wick, it is all good. But if not, and the price start pushing down again, this is the next buy limit we're going to be placing. So our next buy limit is over here, at this wick over here, before the next support, or either at this wick, right? If you're not really looking to have many positions as possible, you either place your buy limit over here or your buy limits over here. So for my choice, I'll take this buy limit over here. Because why? Because I wouldn't want to be in a deep drawdown when the price start pushing below and below. Because if the price start pushing down here, right, and I start buying at here, not here, and if I buy over here and the price start reversing, it's all good, right? But if the price isn't looking to reverse but just retracing and then pushing down again, I wouldn't want my position to be in a deep drawdown. I wouldn't want my position to be in a disadvantageous position, which means if the price start pushing down again, I wouldn't be in a worse position than those buying at this week. I wouldn't be in a worse position than those buying at this support over here, right? Because my position is over here. And that being said, for instance, if I get the position over here and the price start retracing, right, and I got my first position at about here, at about this price point, at about 4963, right, I will take this position to close off this position at a break even, right? If this is a Forex, I will take this position to close off this position at a break even at around here, which means price does not need to push up over here for me to close this position at break even, because I'm using this position to close this position at a break even at about in the middle, right? And then if the price start pushing down again, it is where I'll be placing up my buy limits, either over here or over here, right? Or not, or if the price managed to produce a reversal, a bullish reversal, and I use this position to clear off this position, right? The next retracement, it is where I'm gonna buy, correct? Which means if I clear off this position, the next retracement without touching the support, it is where I'm gonna be buying, and then waiting for the price to break resistance, right? And then the next retracement is also where I'm going to be buying by snowballing on the chart, right? So which means if I've used this position to clear off this position at break even, the next price retracement is where I'm going to buy, right? And the next resistance broken, and then the retracement is where I'm also gonna have my next order or my next position. And then I wait for the price to break resistance, right? Retrace, break resistance, retrace, break resistance, until it has pushed up far enough, and then start retracing, not retracing but reversing, right? So if a resistance is created and then price start pushing down to break support, it is where I'm going to be closing both of my position because a reversal is impending, right? So when I buy, when I sell, I wait for the next reversal before I start closing my position. I do not need to wait or look for the next liquidity. I wait for price action. If price action is impending, if price action is imminent, it is where I'm going to be closing my position. I don't target my take profit at the next liquidity point, at the next high, at the next low, no. I target my take profit at the next price action that is imminent to a reversal, which means if I'm holding a buy position over here, the next reversal, the next real reversal is where I'm going to be closing my position. Likewise, if I'm holding my sell position over here, if the price keep pushing down, I'm not going to close my position until the price start reversing upwards, right? So I don't target any liquidity. I wait for the price to show something that tells me the price is going to start reversing, then I start closing my position. So I don't target liquidity, I don't target the next high. I target what you guys call price action. And price action always happens repeatedly. Price action always repeats itself because the chart doesn't do anything new. The chart is always doing the same thing over and over again. It is just that we are not able to understand the real movement of the chart to be able to understand where to place a position and where to close our position, right? So for today, just wait. So for today, not and tomorrow, at least wait for the price to push up and break resistance before retracing and then buying, or wait for the price to retrace first, right? Wait for the price to retrace and then start buying, and wait for the price to reverse upwards again. So every time you enter a trade, you wait for the price to retrace. If the price is not gonna retrace or reverse, you need to be able to understand where to close your position, even if it means closing at a loss, right? So we enter based on understanding and we close also based on understanding. We don't copy other people's strategy to implement, because copying doesn't mean understanding. Understanding means knowing the true purpose behind each price action, knowing the true purpose behind every price movement, and then closing and opening a position based on those understanding, not copying other strategy to implement and then copying by not understanding anything. You wouldn't be learning anything if you're doing all that, right? You're only learning by trying to understand each movement and the purpose behind each movement. That is how you're going to be trading better and better. Okay, so right now just wait for the price to do as I've told you. Either wait for the price to retrace and then buy, or either wait for the price to break resistance and then wait for the retracement and then buy, or if the price is pushing down and down and down, then leave it enough to push it down until it has pushed down enough to retrace or reverse, and then you can start buying at the next reversal, be it a bullish or a bearish reversal, right? If there is a bearish reversal, you start selling at the retracement. If it is a bullish reversal, you start buying at the next retracement. That is how you're going to be able to understand the chart and trade better and better. So for today, that is all I'm going to be saying. So stay tuned to my video tomorrow. I'll be analyzing at this time if possible, and then I'll be guiding you guys as far as I could, because there'll be one day I'll be stopping. I'll be stopping to teach. I'll be stopping to guide you guys. But for today, I'm still gonna be analyzing here. I'm still gonna be helping. I'm still gonna be guiding, and I still need your guys' opinion on how I'm analyzing, whether how good I am or how not good I am, to be able to improve, to be able to analyze better, to be able to speak better. So for today, I'll see you guys tomorrow. See ya.